Welcome, everyone, to Let's Talk Real Estate Investing. In this series, we chat to seasoned professionals in real estate and industry experts, service providers, to bring you insights, experiences, and lessons through all stages of your journey in real estate investing. Our goal is to empower you with the knowledge and strategies you need to build your personalized real estate investing roadmap or plan that aligns to your unique goals. If you enjoy this episode, please hit the like button, subscribe to my channel. It will help us to share more valuable content with you. And also you'll get notifications when the next podcast has been dropped. My name is Debbie Balfour, if you don't already know, and I'm a real estate investing success coach and a professional real estate investor. I help real estate investors to develop their personalized and customized investing strategies, streamline your business so that you can scale efficiently, build wealth, and create financial and time freedom, especially time freedom. So that's why we want to systemize so that you're working smart, you're working on your business, not in your business. Real estate investing is not a one size fits all, unfortunately. Each person is different depending on, how much money you have, how much time you have, your skills, what you like, what you don't like, etc. So your strategy should be unique to you. Today, I'm really thrilled to have my special guest today, Amit Singh. Amit is a seasoned mortgage broker with 20 years of experience in the financial industry. He specializes in guiding clients through complexities, actually, of both residential and commercial property transactions, helping them to secure the best financing solutions for their investment goal. So let's dive into today's conversation, and I will hand it over to Amit to tell a bit more about his journey to where he is today. Go for it, Amit. Welcome.
Thank you. Thank you, Debbie, for having me, and hello to everyone. A pleasure to be here. So if I had to start where my journey began, I would say I would have to go back to 2003. That's when I started my financing journey. And it's pretty interesting because I had the option of doing something else. At that time, I was working in retail. And so I made the decision of going into banking. And it's probably one of the best decisions I ever made because the last 20 years has been nothing but a learning process for me when it comes to investing, saving, financial planning. And that's how it started in 2003. Now, years down the road, my journey has been through the full banking system, from working in the front line, working in our back office, working mortgages, doing personal loans, helping people with financial planning, things like that. I'm very thankful for that part of it. But now I am more of an independent mortgage broker. So I cater to a lot of individuals that are looking to get financing in residential and commercial because my background has been in commercial financing as well. The last decade has been in small to medium businesses, helping people out, small business owners, helping them out with their goals of purchasing, investment properties or commercial properties. My main focus has been dealing with a lot of small to medium businesses, helping them grow as well.
So real estate investors fit nicely into that niche there for you.
Absolutely.
Yeah.
And because the background has been mostly in small to medium businesses, now I notice that the same business owners are looking to purchase residential properties as well. So I do understand their financial situation, meaning when I look at their financial statements or when I look at their T1 generals or T2s, whatever it is, I have a really strong understanding of what type of income is needed for an application. We have individuals where they aim X amount of dollars, but they really make something else. So I have programs out there where I can only use 6 months of bank statements to qualify my clients. So there's different ways of looking at it, for sure.
What's the advantage of using a mortgage broker over going to, my bank?
I used to work at a bank, and at the bank level, we only sell the one product that's offered by the bank, and really that's it. And usually most of the banks are pretty similar. They all have their RSP products, TFSA, their mortgage, their commercial loans, whatever it is. It's pretty much the same. But the advantage of going with a broker is we have access to all of these lenders. Not only that, these banks have different rates as well. So we have access to those as well. So we can get you the preferred rate, better product. That's what the advantage is going through a broker. There's this misunderstanding where we have to pay the mortgage broker to deal with them. That's absolutely not true. It's incorrect. We do not charge our clients any type of a fee. It's usually the lenders that pay the mortgage brokers. And that actually, the money doesn't even come to me. It actually goes to the brokerage, and then the brokerage will pay the mortgage broker.
Right.
So if you have individuals out there that are charging clients fees, that's unethical. That's not something that's practiced in our industry.
And the client actually get an advantage because you're able to get preferred rates instead of they're not paying any more by coming through you than going to your bank.
Absolutely. So on the brokerage side, different brokerages have different programs. Through our brokerage, Team G, we have preferred rates for the group of brokers that work for that brokerage. So you're absolutely right. We have preferred rates just that are offered only to us that you might not get through your own bank.
That's because you're doing wholesale, because you're bringing in more like
Volume.
us individuals don't have that volume behind us.
Yeah, and there's a lot of banks and credit unions love dealing with us because, they don't pay us, they don't pay for our vacation or healthcare. So their overhead is pretty low themselves. So they love dealing with brokers, and we bring them a lot of business that way as well. But the unfortunate thing is, when it comes to their own clients, we get the preferred rates to offer, and they don't directly offer it to them. Some do and some don't.
Well, what I love about going through mortgage brokers, myself, I may declare or tell information that the bank doesn't really need to know. And going through a mortgage broker, you're able to tell the story the way you know that specific lender likes to hear it, or what are they looking for. You're able to tell that story and not more than you have to in order to get us the best rates.
No, that's absolutely right. And packaging a file is very important. So that's where my experience comes in the last 20 years of just dealing with different clients and packaging a deal. So if you were to, give me all your documentation, I know exactly how to present to which lender. I know exactly what they're looking for. And that is a benefit for our clients. If you were to go to your institution, they might ask you for a whole bunch of documents. On our end, we have options of going through the A side of lending, there's the B side of lending, and there's the private lending as well. B lending is not as strict as your A side. So your A side are your major banks and the big five banks and the credit unions, and you got the B lenders, which are well known. Everyone can Google them, and they're all over the place as well. But they all have the same type of due diligence, but the requirements for documentation is not the same. If you were self-employed and I went through your bank or one of the banks, the requirement may be collect this, and all of this stuff. And then if I go to the B side, we're okay with 6 months of bank statements because that proves that this individual is generating income. And they might just say, well, we need to collect one more thing just to make sure that all your taxes are paid. And that's it. We're good to go, right? So there's different options when it comes to dealing with a mortgage broker as well. Because you go to your bank, you might just get a decline. Well, on our end, I don't look at such thing as a decline because if it's decline on the A, then we'll figure something out on the B. If you can't do it on the B, there's always private lending as well, depending on what type of transaction this is. Is it for your primary residence? Is it for investing into a property? Is it a short-term investment, a long-term investment? So we kind of have to take a look at and understand what you're looking for as well.
Yeah, that sounds good. Tell me a bit more about the private lending. What's that all about?
Okay, so the private lending is, I look at this as more of a short-term loan. Okay, so it's a short-term loan. A lot of the private lenders, they want the exit strategy. How will the client pay us back? Usually some of this private lending is, 6 months to a year. There's nothing longer. There's some that offer a little bit longer, maybe 1 or 2 years, but most of them stay within the 6 months to a year type of a loan. There's a fee on it. The rates are obviously higher than your A lending or your B lending. It's more of common sense financing. So they're more open to, um, when we take a look at the security. Hypothetical is just if you're looking at a $500,000 condo and you're putting down 50, 60%. Well, it's common sense that there's so much equity already built into this property. You're just doing it for short term to purchase this property and maybe in a year or so flip it, sell it, or you need to close on a property really quick, and then we can take you to the B side or to the A side after the fact, right? Because sometimes there's short closes that happen. Not in this market right now, but there has been situations where this is on the market right now. We need to get financing for this ASAP. So we go to the private lender, we secure financing for them, and then, within 6 months or so, we try to get them on the B side or the A side, because on the A side, the process could be a little bit longer, 2 weeks or a week and a half, because you have to do an appraisal and the lawyers and all this other stuff. They still do that on the private side as well, but it's quicker. It's a quicker turnaround time for the
Right.
approval piece of it.
Mm.
I can kind of give you an example of a private file is
Sure. Sounds good.
there's a project out in the Fraser Valley where the project is about 80% complete. It's a construction project, a development project, and the the owners needed about 450 to 1,000 to complete on this development project. So they had their first mortgage with a lender. They weren't able to get a second mortgage. So I was able to go in, provide the private financing for them. The lender that we went through, they looked at the project, they looked at the construction budget, and we had to order an appraisal on that property. After the course of construction, after the project would have been done and complete, the valuation was so high where it would just made complete sense to lend what they were asking for.
Right.
Because the project's already 80% complete and they needed additional funds to do mill work, some landscaping, and a few other things. Because it wasn't a single detached, it's just a bigger development, but they needed money to complete pay trades, and we're in the spring market. They wanted to be ready for the spring market to make sure they sell.
Right.
And they will, even though our market has been really slow, and we all know that. But I think they'll price it, I guess, accordingly, and it will move. So that's just one example of a developer that was like, we just need additional funds to finish our project, and that's all we need.
Right.
I was able to go in, here's this, and you're good to go, right? So that was done within a week and a half. So that was pretty quick turnaround time. I got the approval right away. We did the appraisal, and before you know it, they were at the lawyers, and they're signing documents, and the funds were being dispersed, and they were happy with it, clearly, right? Another example of a file is individual it's more of a kind of like a debt consolidation where they have all this unsecured debt, but they have a lot of equity in their home, where we're able to do a short term, take X amount of dollars out, pay their loans out. And what we're doing is actually, this will be a two-part application. Later on, we're going to be moving that mortgage into the A side, hopefully, because right now it's sitting on the B side.
Yes.
And they make pretty good income, but the thing is their rate is so low, so they're not ready to just
break that mortgage.
take that mortgage at the moment, and that's going to be down the line because when they went to their bank, they weren't able to get the amount they're looking for because of qualification. There's, oh, you didn't meet this debt servicing ratio or whatever it is. But on the private side, they looked at it, they're like, okay, well, there's this much equity in there, and they're only asking for this much. Yes, we can help them out.
Right.
Right. So it's just some of this stuff is really common sense, where that same file on the A side, they might not be able to do anything for you.
I love those ideas. I love what you're saying right now because this is not just, so these are not just your typical, you can think outside the box when it comes to this because it's not your typical kind of transactions. Oh, I need to buy this house and I need a mortgage on it and or those kind of things. This is like you said, one was construction project to complete, the other is actually trying to consolidate debt and reduce expenses and what's out there. So again, our income when it comes to small business, income can come from, net income comes from either increased revenues or decrease expenses. So this was a way like consolidating all of that debt and maybe paying a little bit less through having one lender is I love that idea. So
Yeah,
it's a
yeah,
good.
no, absolutely. There's definitely you have to think outside of the box when it comes to some of your clients because they either get it themselves into position or they get into a position where they need that assistance, someone that can think like, you know what, I will be able to help you out, but we need to structure it this way.
Mhm.
You have this equity or this expense, okay, or your cash flow if it's a business or whatever it may be, right? And you need to have individuals that are a little bit more experienced. And when it comes to all these different situations, right? I've dealt with so many files in the past, um, where, some of them are pretty interesting but we're able to help them out. I've had individuals where they just needed X amount of dollars just to give to their kids just as a down payment. They didn't qualify necessarily for like a reverse mortgage, but with age and not that, but they're like, hey, we have all this equity, but they don't have enough income to qualify traditionally. On
Right.
the conventional side of things,
Yeah.
yeah, just on the A side. So, and they need just a small amount, right? And we were able to do that, and off you go, right? Like it was pretty simple actually. Some transactions are very simple, but the banks sometimes make it very complex too, because they want to see all this documentation or add this person on title or do this and do that. And it doesn't need to be complex. You can just kind of take a step back and just say, well, if we did this, will it work?
Yeah.
And
I think that's the, so there's two there, what I'm hearing from you is that there are a few advantages. There's like you can go to your bank and you get very limited, you get a limited scope of like when it comes to rates and products because it's only that bank and it's their rules. Then you go to mortgage broker and mortgage broker then has a larger suite, but then there are different levels of mortgage brokers. Like for yourself, you've been in the business finance for 20 years. So now you can actually, and you have access to a wider range as an independent mortgage broker of products and different lenders. So going to someone that's experienced, like you were saying, some of these things, like I would think, oh, I wouldn't qualify as a business owner, or I wouldn't qualify because I'm not a permanent resident, or all of these kind of things. You are aware of these programs, you can see things creatively, different types of ways of doing things, where like a middle of the range, like a mortgage broker that would just look after homeowners, for instance, may not have that knowledge or even those products available.
no, absolutely, absolutely. Then, and we get updates on all these different products that are out there. And I think earlier we were talking about there's a program out there that protects if you're a protected individual in Canada, so you're part of this refugee program, where you're not going back to your country, but you're protected and you have your working visa and whatnot. There's actually programs out there through various lenders that can help you get a mortgage. So because you're going to be you've made Canada your home now, and and there's programs out there that will help you purchase homes, right?
Mhm.
Another interesting thing is, we're going to see a few more updates coming up. Is it April 28th? Or maybe a little bit after April 28th with all the election where, there could be things that are going to be changing on the GST front of things. A party might say, well, there is no GST or there will be GST, the amount and all of that type of stuff, right? So yeah, you just kind of have to be aware of what's going on in the market. And mortgage brokers are very well aware because we're always on calls and talking to our lender partners, our individuals that are in the industry all the time, every day. And this is what we do, right? We do mortgages and commercial mortgages and things like that. Not all brokers do commercial mortgages, I do, but I don't do anything else. I don't sell RSPs or TFSAs or RESP plans, nothing like that. I focus on specialize in something where I'm expected to know everything when you come to me. So that's the level of, I think the expectation our customers have as well when they're dealing with a broker, especially one that's been in the industry for a while as well, right? You have that reputation.
Definitely. I was so surprised when I went to so I went through my mortgage broker and I got my mortgage, and then I went for my investment property, and then I went to, yeah, but I still have to go to the bank,
Sign.
to sign and get things done. And I started asking them about, so I had mortgage plus improvements. And I was asking them things like, okay, how do I get the other part? Do I have to, you know, how does it work for me to get the rest of it? And, do I have to show receipts or any of these things? And they didn't have a clue. Like,
Yeah.
this is their product.
Yeah.
They
Yeah.
had no clue as to how it worked.
Yeah. It's it's unfortunate, right? And I think there's a bigger problem. It's the training. Maybe it's not there. A lot of I know institutions at one point were letting their experienced staff go as well, and then they're hiring newer staff, and it's not their fault, but at the same time, that same level of expertise, experience is not there as well.
Yeah.
And I was in the banking system for 17 years, and so that there goes that 17 years of experience just
Yeah.
left the bank, right?
Absolutely. Well,
So,
imagine, like, they didn't even know how it works. So if I'd
yeah,
gone to them, they would have never offered me that.
yeah. If you didn't bring it up, they wouldn't have a clue. I
Like,
mean,
no, it was my mortgage broker that organized everything and said, yes, that we'll put this through as mortgage plus improvements, etc. Because he knew I was doing a renovation,
patient,
but it
yeah.
wasn't it was lipstick kind of things. It was within that amount. It was on a condo. And he says, oh yeah, and the advantages of that. But if I'd gone to the bank, they would have just looked at it as okay, purchase it and then refinance it later. Right?
Yeah, no, I think, yeah, and to your point earlier, Debbie, you have to kind of think outside the box when it comes to your clients. You have to really sit down and understand their needs and what they're thinking first. Because then that's what I like to do as well, is sit down and, okay, tell me what your thoughts are on this financing, because they might be thinking it but not maybe, I don't know,
Or
explaining
they
it
come to
properly.
you with a solution already in mind,
Yeah.
but do you actually have a better solution?
Or we do what they're asking, but uh just maybe in a different way, right? Little tweaks to it, this and that. And someone might say, well, I don't want to put anything down, but I want a mortgage. Well, maybe not. Maybe you might have to put down 5 to 10%, and then maybe get you into a home or whatever the case is, right?
Mhm.
But yeah, no, understanding the clients is the most important thing. I always take my time to sit down and just kind of get to know what their thoughts are, what they're thinking, and then kind of work kind of backwards, right? And okay, this is where we've come. This is you know, a solution that works for you for this particular transaction,
Right.
right?
So
So
I know that when we met and you told me about what you did, etc., I got all excited about the private side of things because, of
yeah,
course, real estate investors, we run out of qualified money pretty
yeah,
quickly. So, but they're not all mortgage brokers have access to private funds?
To be honest with you, most of them do have access to it. I shouldn't
Mm-hmm.
say not all do, maybe, but I know
Mm-hmm.
I have access to it. Depending on, I guess, the brokerage that you work for, they might just focus on one type of lending and that's it. But for me, I have access to, they call them MIC lenders, mortgage investment companies, and they're reputable companies, right? So, they've done billions of dollars and millions of dollars in financing. And so they're big companies. So I
So
like
this
to
is
do,
not like somebody like me that's saying, "Oh, I've got 200,000 to lend."
yeah.
These are large companies
These are
lending.
large companies where I fall into that private sector, but I don't have, I mean, I know there's individuals out there, just say if there's a couple of lawyers and a mortgage broker and a realtor got together and they use their own money to lend
Mhm.
out. I don't get involved in that because this I just don't. But there are individuals out there that provide that type of financing, right? They charge a fee, they have their own interest rate. But if something were to happen, I prefer dealing with companies that are either publicly
Larger.
traded or they're larger companies, right? The last thing you want is borrowing money from an individual and they put a lien on this house and now you have to move out because they've taken over the home or something.
Yeah, and but also with the larger companies, I see the advantage in that. Say, I said I only needed a year, but now I need 2 years. With the smaller individuals, they're kind of well, that's all I had allocated for this. I need this money back now. But the
Yep.
larger company, it would probably be easier, wouldn't it, to say, okay, we'll extend that for another year.
Yeah, most of the private lenders are usually they're shorter term. They're meant for short term
Hmm.
financing, 6 months to a year.
Hmm.
But if you're during that year, it's coming up for renewal, you can definitely just say, hey, you know what? I need an extension for 3 months or 6 months or whatever
Hmm.
it is, and we just put a business case in there. Mind you, they will charge a certain number of fee, but it's still worth it for you to
Finish
whatever you're doing,
the
right?
investment. Yeah.
And to just then move. But the goal is always to move from the private side to the B or the A side. That's the
Yes, you don't
goal.
want to stay too long in that
You
high
don't want to
interest
stay too
rates.
long. No, no, you don't want to get to it's and I tell this to everyone. Private is this should change the name. It should be I don't know, but it's just short-term financing, right? Um,
Hard money lenders.
Yeah, there you go. There you
Yeah,
go.
yeah, they're hard money
And
lenders.
it's okay. I mean, a lot of people take advantage of that, and they've done really well for themselves when it comes to picking out investment properties.
Hmm.
They're like, hey, we need to get that property. I know I won't qualify on the A side, maybe no on the B side, but I have all this equity in my home that can actually buy that condo or whatever it is. So we take that money out of there and then we just purchase that or whichever way we do it, right? Like, so
Hmm.
there's, you have to think, like you said, you just, and you, when you said you have to think outside the box, like thing is, how can we make this happen?
Yes.
It's not a no, but can we make it happen today? Well, maybe it might not be today, but maybe later on we can make it happen because you're going to improve on, maybe your credit or maybe get a little bit more equity built up or
Do some
add
forced equity.
exactly, or add
Mhm.
another individual. So it's
Mhm.
never no, but let's find some solutions. And some individuals are very happy with the solutions that we provide. And they're like, you know what, I can make can make that work because I can add my son or daughter, or I can add my, parent on the application to make this work. But this we can make it work, right? So and it's yeah, so it's never a hard no. No one likes to hear no anyways or decline. I don't even like saying that.
Yeah.
It's a solution. There's a solution for your request.
So what are some of the mistakes you see new investors making?
I think some of the mistakes is not understanding the market itself or over leveraging yourself. So what some people do is they take on too much debt. So and there's a few things. So they could be taking on too much that they probably already have a mortgage and now they really want this investment property, but not realizing that investment property they have because rental market's gone down, that the rent is not covering all their expenses like their property tax, strata, maintenance, if you're using a property manager, things like that. And now they have to pay out of pocket for this investment property. While their current situation, meaning they still have their mortgage payments, they still have their gas, food, their kids' activities, and all these other things they have, they're taking on too much. That's one of the mistakes. And then the other one is it's not understanding the location. So you kind of have to look at the location. Is there transit out there? What type of amenities? Especially for investment, right? People that are renting, they want to be close to maybe schools, SkyTrain line, transit, and things like that, where they have easy access to things, right?
Market growing.
And also, it's always good to, the area that you're looking at, see if there's any future development that's happening. If you come out to Fraser Valley, Walnut Grove, Langley area, and things like that, there's so many things that are going on, right? Like it's so busy everywhere, and those were the future development that's were happening. It's a growing community, and
Hmm.
it's yes, a little bit dense everywhere, but that's what a growing community would look like, right? And you can pick any community out in, Vancouver, parts of Surrey. It's busy. There's a reason why it's busy. People are moving in, right?
Yes.
So they need to find places for them. The other thing I was thinking was, and I think we had talked about it last time, is, and this is very important when it comes to the mistake part of it, is not having the right realtor in your team. You got to have the right professionals, right? You got to have your mortgage broker, your realtor, your lawyer, and things like that. But a reputable realtor is very important as well because they know the market, they know the area, they know what's happening, what type of development's going on, what's not happening in the area. That's very, very important. I always that my clients know, dealing with a reputable realtor will it's a peace of mind because they also take a look at people don't look people might not pay attention to this, but the strata minutes that are on there, if you're looking to buy condos or townhouses and things, oh, the strata minutes will tell you a story. Imagine buying a place and you're reading it like, oh, unit 506, and I'm going buying unit 507. 506 has all these noise complaints all the time. The last thing you want is your tenant moving into a place where there's always noise. They won't last for too long. You're always gonna
Yes.
have a vacant property, right?
I got some good in the positive side for condos that I bought, in that it was an older condo and you would think, and it looked kind of, dingy thing. But by reading the strata minutes, I was able to see what their plans were over the next few years to improve this condo. So by me improving the inside, eventually what happened was now the outside has kind of improved to match my inside. So I could see that like I was buying in at lower, knowing what, the
Yeah,
strata had planned for that building, and that it would actually, improve in value.
absolutely. There's that. There's also we had situations where there was a levy in place where there's a $15,000 levy that's coming up.
Mhm.
You might not want to buy that property, or maybe you might because
It will
people will
improve the,
appreciate your value as well, right?
yes.
And I think also having a plan. So when you look at it, like we're talking about investing into real estate. So as an investor, you want to take a look at what type of product you'll be going in as well. So if you're looking at a condo, we'll just use a condo for example.
Mhm.
Is this going to be for short term, long term? Are you planning to flip it? Well, we have some new laws that are in place now for flipping properties and
Mhm.
whatnot. So if you're looking at a long-term investment, well, maybe you might want to go into a 2 or 3 year mortgage. But if it's going to be for a short term, you might want to just stick with a variable product because then your penalties won't be as high and things like that.
Yeah.
So,
Mhm.
so yeah, there's a lot of things that we just have to be mindful of as well, right? We just
And
have
if
to be mindful.
you're flipping it, then you want to look at private money, because
Yeah.
you're going to be breaking that more. Yeah. Well, a lot of the banks don't want you as a flipper.
Yeah. And there's I guess some uh, rules have changed around that as well when it comes to capital gains and all of that. So that's something that I recommend that sitting down with an accountant and say, hey, this is what I'm doing. What's your recommendation? And there's a lot of people out there, again, when it comes to the investment properties, they like to hold everything in their holding company. So that's something that they prefer. But again, I'm not an accountant. I can't give advice on that. But again, it's one of those things where you need to sit down with an accountant, and does it make sense? Does it make tax? Is there tax benefit to it? Tax implications will it have if
Right.
you did that? And it's funny, of so many moving parts if you if you're looking at just investing into real estate properties, whether it's commercial or residential, because it's
Mhm.
like it's not easy as, hey, I got this much money, I'm going to invest. Okay,
It's
that's
not
good.
black and white at all. Yeah.
Absolutely not. There could be vacancy that's, you're not able to rent your condo out for months at a time. So do you have a backup plan?
Mhm.
This is when that planning part comes into play. Like, how does your current financial situation look like? And what funds do you have kind of parked in the reserve, like your reserve funds
Mhm.
for emergencies where you're like, you know what, I haven't rented this place out for 3 months. What do I do now? I still have to make the mortgage payment, still have to make the strata payment, or whatever it is.
Mhm.
Um, and then go from there. And one thing I should have mentioned was I was dealing with one of my investor clients. What they did was they bought a property and they had put down 20%. So they put down 20%. So it's their primary residence, but they rented out their rooms. So they not only rented out their basement, they rented out the other rooms as well.
Were
So
they renting somewhere else themselves?
no, they were living there.
They were living there too.
Yeah,
Okay, so they were majorly house hacking.
yeah, and they had students living upstairs, and they had two basement that was rented out as well. So there was a
Mhm.
good flow of income coming in to take care
Definitely.
of the mortgage payment.
So they
Uh,
were living mortgage free.
yeah, essentially, yeah, they were. That was their investment plan, though, right? This is how
Mhm.
they're gonna um, build their equity, while their wealth that they generate is gonna go into something else.
So that's the sacrifice. Some people don't want to sacrifice and live with other people in their home, but for
Yeah,
others, that's yeah, that
yeah.
definitely. So looking at
So
house hacking.
yeah, and for that individual, it made sense because the basements they're self-contained, so there were no one is going upstairs, but the upstairs, there's
Mhm.
students living there, and then they went through the school program where the students are, what's that word?
International students.
International students,
Yeah.
yeah, and you're dealing with a reputable university as well too, right? So I mean that's one way of looking at it. Yeah, but that just there's so many. Yeah, that's one of the ways, I guess, if you want to get into investment properties, you don't have to do it yourself, right? You can always go in with your sibling, your parents, your colleague, or whatever. If you ever do that, I recommend obviously getting a partnership agreement, seeing a lawyer, and things like that. You don't have to do it yourself. You
Yeah.
can always go in and you know I can give you an example of a $500,000 condo at 20%, 100,000, you get four people in there, or even three people in there, your down payment kind of shrinks a little, right? But
Hmm.
you're all kind of working towards the same goal. But
So is that why you asked me to ask you? Like I thought, is it a trick question? How much money do you need to invest in a property?
yeah, the thing is, you yourself might not need, like if we use the example of a $500,000 mortgage, 20% is $100,000. Not everyone has $100,000 walking around or
Mhm.
sitting in their bank account to invest into a property. But if you have a business partner, one or two, all of a sudden, that 100,000 goes to 50,000 to 33,000 to 25,000, right? But
Mhm.
you're still building that equity in that.
It's better to have a
Yep.
piece of the pie than no piece of the pie.
That's the thing. And then that's when my point was the location piece of it as well. Are there development going on? Because you could be sitting on a property where, you know, who knows what's going to happen in the future? Maybe a SkyTrain line going in, all of a sudden, the property, the valuation goes up, right?
Yeah, definitely.
So yeah, like that thing was like, yeah, you don't have to do it yourself. There's other options. But if you do that, you have to get a legal contract done. That's my That's my
Yes,
recommendation.
it doesn't matter if it's family. It's money. Just yeah, it just helps to remove any blurred lines and help makes it very black and white with that with a contract.
Yeah, no, absolutely.
So Amit, how like you're located in the Fraser Valley of British Columbia, but how many
Correct.
like can you help others in other provinces? Like how does that work? Like who are like how can you like who can you help?
Yeah, so we're able to help anyone across the country. So this end to the other side of the province, basically,
Okay.
we're able to help everyone out. Our brokerage is able to, because our I'm licensed in BC, but I'm able to help clients out across the province as well because I have to just send the file to our back office and they process it. So it doesn't matter where in Canada if you're looking to purchase something, give me a call and I'll be able to definitely accommodate, get that financing done for you. If it's investment or if you're looking to move provinces and whatnot. I know there's a lot of activity at one point was happening in Alberta, and we had a bunch of inquiries in Ontario and things like that. We're definitely able to help out. Uh,
So
yeah,
if the client is in Ontario and sees this podcast and say, "Hey, it sounds very knowledgeable, and I'd like to find out more. I'd like to work with him," would you be able to help that person?
absolutely. I've helped one of my clients that was living in Ontario buy a property out here. So we're able to do
Or
that
the other way around, if
the other way
somebody's in
around.
BC and wanting to purchase in Nova Scotia or something like that.
No, this one was Ontario, and they wanted us to come to move to
Or
BC. I'm like,
BC,
oh,
yeah.
perfect. And they have a property out there as well. So now we have a couple of properties that we're going to be eventually taking equity out of there to do something else that way, or maybe down here.
So you
Right.
don't have any geographical boundaries when it
Right.
comes to the. What about US investing?
Yep. So U.S. investing, we actually had a seminar just not too long ago, was it a couple of days ago, for we do have a partner that we can go through if you're looking to purchase or invest in US.
Mhm.
Now, when it comes
That
to
is
that,
that's a hot strategy right now for real estate investors.
that's correct. And then so we deal with individuals and brokerages that are because our jurisdiction is, if it's BC,
Hmm.
Canada, the rules change when you're out of Canada, basically. And so we have preferred partners or brokerages that we deal with that cater to individuals that are looking to purchase in anywhere in United States. So you just have to reach out to us. We put something together. We get a little bit of information and we fire it off to um, that brokerage, and they'll
Oh,
finish.
so you partner with someone in the US in order to do that. That's awesome. So
Yeah,
that makes me even more excited when it comes to my clients and my network because private money was a big one and then US investing is another one. So being
yeah.
able to qualify and not have to worry about going to the United States and figuring it out from that perspective. Uh,
Yeah. Yeah, no, we definitely partner up with brokerage that's, not necessarily specializes in US transactions, but that we partner with that can help our clients.
do you
Yeah.
do anything like, would you be able to help, say, I wanted to buy something in Portugal?
It's funny. That is something that I am working on actually at the moment. I had an inquiry coming in today for Italy.
Okay.
And I'm still doing my research on to see if there's any, or is it something that we're able to do? Because I know if I took equity out of your home here, you can use that money to buy property anywhere in
Yeah.
the
Yeah, in the world because yeah,
yeah, it's just the
check.
refinance part of
Yeah.
it. Now, when it comes to financing a property in Portugal,
Mhm.
if you're using their bank, I mean, everything changes, right? Because
Yeah,
they have their
exactly.
own
It's
things
just
in place.
testing you there.
Yeah,
You never know because like I can assume that that's not possible,
yeah.
but you know.
I don't think it's not word is not impossible. I think
Mhm.
we just have to be we just have to partner with the right brokerage that probably caters to that. They
Right.
might be, US or Canada, but they have a direct link to the brokerage maybe in Portugal and just say, hey, here's the information. This is what we need. It's a foreign investor, or maybe they're citizens of I have no idea what the situation would look like, but there's always, and if someone wants to buy a property, I'm pretty sure there's a solution for it.
Well, I asked about Portugal because that's where I'd like to retire.
That's awesome.
That was why I picked Portugal. It's on my mind because I think I'm going to be going probably this year and check it out a bit.
That's awesome. I heard some places, some parts of Greece, they're actually,
Incentivizing people.
yeah,
In
yeah,
Italy too, I think it's
yeah,
like in Tuscany is one of the places that they're incentivizing people to come out.
yeah.
Yeah.
No, that's awesome.
Awesome. Thank you so much, Amit, for your time. I really appreciate it. I am going to be editing into this
Yeah.
video your contact information of how to get in touch with you. And you do have a freebie to offer anyone listening. What is that?
Well, the thing is, what I usually do is I have a 45 to an hour conversation with any clients anywhere, just to
Mhm.
kind of better understand what their goals are when it comes to either real estate investing or if they're looking to purchase any type of commercial properties or what have you. I'll meet them anywhere or over Zoom. And I spend that time just understanding and then coming up with a package on like, you know what, this is some of the strategies or what we should present it to them and see and just basically go from there, right?
Awesome. Yeah.
Yeah.
So please, I'll share Amit's information with you. Get in touch with him if there's anything here that kind of triggers, oh, I'd love to find out more. If you're looking at, you're looking at something right now, or you do in the future, keep him in mind because as he mentioned, he has a wide range of options for you and a lot of experience behind them because that's important when working with just as working with a lawyer, an accountant, your broker, your mortgage broker is that experience because with their that experience it comes that creative thinking and also experience with working with investors because you know how investors think, right, and what they need. So awesome. Thank you so much for your time. I really appreciate it. And once again, everybody, if you like this podcast, please hit that like button and subscribe for future podcasts. It's usually dropped every Wednesday, but I may miss some sometimes.
Thank you for having me. I appreciate this.
You're welcome. And thank you so much. It's so much great knowledge that you shared with us and that will help other investors as they're trying to figure out what their strategy is. And their strategy isn't just about, I'm going to do buy and hold, but their strategy needs to include, how am I going to finance, what I'm
Absolutely.
So thank you so much. Thanks,
Thank
everyone.
you.